The next couple of quarters here into the new year, Q1 and Q2, I think the backdrop for Bitcoin and the broader crypto universe, because they're all very correlated.
Well, we're seeing that. I mean, just the institutional growth over the past 12 months has been astonishing, and we're seeing strong signs of that accelerating over the next year.
Anyone who's been in the market since 2018 has noticed that the price shape has changed, and the moves are very sharp, and the liquidation events.
Hey everyone, and welcome back to Wealthy Value. Today's video is sponsored by Metabillionaire, an NFT collection that is gearing up to become the next big blue chip NFT project. Metabillionaire is the first ever entrepreneur-based NFT. By becoming an owner, you will get access to a private mastermind of elite entrepreneurs from all backgrounds, such as real estate, art, e-commerce, startup, stocks, and crypto. You will be introduced to exclusive opportunities such as IDOs, ICOs, as well as events in cities like Dubai, Los Angeles, and New York. Entry will be free for all holders. You will also enter the metaverse with a field on Sandbox. Every 3 months, the team will be investing $50,000 to $500 USD in 2 of the holders' projects. As a community member, you will choose the projects to invest in, and you will have the chance to invest in those projects yourself. The project will also have a dedicated charity fund, consisting of 150,000 USD plus a part of the royalties, to build schools and water wells in Africa. You can buy a Metabillionaire from OpenSea at the link in the description, but act fast. The floor price is rising, and some billionaires are already selling for 6 Ethereum, around $24,000. And now, back to our video.
Yeah, I think it's structurally still intact. But, December was, I'm told it was going to be soft from the institutional money. They want to cash out and book their profits. I'm hearing that that's kind of a January story. So, and also we've got the tax sell-off kind of regime right now. So these sort of news and narrative fundamentally weak for December. But, if we're looking over the next 6 months, structurally, it's pretty strong. What gives me confidence about that is that there's really a lot of coins that have been moved to long-term holders who have held their coins for 5 months or more. And so they're at maximum accumulation. They're slowly divesting as they do, as the price runs up and they take some profits. Predominantly, the coins are with the long-term holders, and bear markets don't usually start until the long-term holders are divested, and they're now in the short-term holder sort of category where those weak hands are much more prone to dumping or selling out. And the last sort of crash we had from the low 60s to eventually the 29,000, those long-term holders had completely exhausted. We're currently pretty charged up with those guys holding onto their coins. So depending on how quickly they divest, I think we've got anything from 3 to 6 months of a run, maybe longer, just have to see. Exactly, and we're not really tracking individual participants in that kind of model. So I see it as like different waves of people coming in. They come in, they hold, they wait for the rally, they take their profits. And if you go back and you look at 5 months from now, that was really in the $30,000 range after it dumped. And those guys, held up to now, and they're divesting and taking their profits. And it was very similar the last sort of 5 months. So these alternating cycles where new people come in, they get the run, they sell, and then people buy into the rallies, and they experience the dump sometimes, and then they get their turn. But in this case, there's other data that I'm looking at. The guys that dumped at the 60,000 when we went down to 29 back in May, they were like these kind of people that were accumulating, and then they completely dumped out. And now with more of the forensics metrics, the supply shocks, where we can actually see the different categories of holders, a whole lot of strong-handed accumulators were lost. And then they sort of popped up in the speculative swing trade. It seems like sophisticated swing traders now that are playing the market. So it's looking quite different from what we saw in 2017 and the cycles before. Yeah, it's quite interesting, this whole cycle. Never seen anything like this before. Yeah, I think that's it, Scott. I think, like, if you were to look back in the deep history of geological Bitcoin time, really the early guys were the techos, you know, the guys that mined it, and then, you know, we had the Silk Road and so forth. We had the libertarians. The very early smart money, I think, came in 2016, 17 when it started to, you know, Bitcoin articles popped up around the Winklevoss ETF in 2017, and saw a lot of that kind of cohort come in. And then we had the derivatives come in with the BitMEX invention of the perpetual swap, and by I'd say 2019, 2020, we had the infrastructure here for institutionals. And so now we're really deep into this, where we've got family offices, we've got large hedge funds, mutual funds, now sovereign wealth sort of coming in, like El Salvador's the first sovereign nation to accumulate. And so it's a lot different, and the instruments are different now. We've got not only the perps, but we've got very well developed options and futures markets. Well, options aren't quite as liquid, but they're coming. And you've got the ETF that backs onto the CME, like a regulated US exchange. So a lot of institutions worldwide are deploying through like futures instruments because it's fully regulated and it's very easy for them. So I think that's the whole thing's changed, right? And everything was underpriced. And I've never seen it so out of whack before. It was fundamentally priced at 50,000 when it was in the 30s for so long. It's like, man, that's almost a 2x trade there. If you're just happy to not leverage it up, you really need to know what you're doing if you're trading on leverage. I've been trading since 2014, the crypto markets, and I don't think I was consistently profitable to 2019, 2020.
Same.
You know, it's like, it takes a lot of years. You know, you go, oh, I'm winning, and then bang, something happens, I'm losing. It's all kind of bad news, because I can't see a 1 year bear market again. I think with the advent of this new sophistication in the market, it's a lot harder to get a mania and a blow off top, which, you know, when it gets that out of bounds, it takes a year to mean revert back to where it should be and go below and then come back up. I think what we've got right now is like these big sort of collapses of 50% in a multi-month, maybe 3 or 4 months of recovery. Well, it took us 3 months and then another from 2 months to recline. April. So it's like that. I'd say we're not in the main run of a bull market. Like, there's a main run phase where it's just gonna go up. The momentum's strong. We're just coming out of reaccumulation. We just had this massive sell-off in May. The sideways reaccumulation has happened, and then there's that sort of tentative first climb out, and, you know, often there's another sort of accumulation, and then we're off to the races, and that's when everything's strong, and that's the main phase of the bull run. We're not there yet. We're recovering and setting up for it, and so I think we're not going to get that till 2022. I was just checking earlier today in a prior call, you know, the average price of buying has been around 25,000. So if you work that out across all the coins, it's like $0.45 trillion. And Bitcoin's, I think, a shade under $1 trillion right now. So it's a kind of a 2-to-1 ratio. If we're going to go, what do you want? Let's say if we get 10x, so right, we're talking about effectively $5 trillion needs to come in to give us that 10x, 4 or 5 trillion. That's a lot of money, right? That's like it's got a really financial cap of gold. Gold's, you know, only a certain percentage is used financially, the rest is industrial. Right. Got to eat the entire gold cap, financial cap, to push Bitcoin 10x. So